All right, great. Welcome everybody. Thanks for joining me and thanks for being here. We're right on time. Looks like 11 a.m. Pacific. We'll go ahead and get the show on the road. We have a lot of material to cover. And with that said, let's go ahead and jump right in. We're going to talk about automated options, spreads, using for income generation. I think it's a strategy you probably have never seen. We're going to look at also a bonus demo on automated trading systems. So we'll go ahead and get that show on the road here. Before we get started, let's talk about speculating. Remember, speculators accept risk. We're trying to make profit as prices move up, down, and sideways, but of course there's always risk. So do take a moment and familiarize yourself with the risk disclosure. Okay, great. Remember, it's one of those things where you should pay attention when you're trading that past performance is no guarantee of future results, and all funds committed should be risk capital. And our goal today, we'll look at technology experts are using, something you've never seen before, and diversify among global markets. We can do this with bull, bear, and flat market conditions. You know, I'm getting some odd feedback here. I think it might be because of my webcam. I'm going to turn that off for a moment. Maybe we'll jump back on later. Also, you get a little more space on the screen that way. So for now, I'm going to shut that off, and hopefully that helps. Hopefully everyone can hear me just fine. If not, let me know. And also feel free to jump in and ask questions anytime. I can sometimes, along the way, answer questions as we go, but there's an FAQ at the end. And looks like we still have people joining us, which is fine. So thanks for that. Yep, more people coming on board. So I'll just pause for just a brief second here. We get sometimes a big crowd right at the beginning, and then another minute later, another big crowd joins. So that's great. So here is what we're trying to avoid. We don't want to end up like this trader here, struggling with what to buy and what to sell and what the price is. You want to end up like this robot here, sort of happily trading away with no basically hesitation and questions. So how do you trade in all this chop? That's really one of the big questions we have as traders. So we're going to look at technology. We'll look at automated futures trading systems, full automated risk and profit controls among global markets. And then we'll also look at our algo-generated option spreads. These are pre-built option spreads with the help of technology, of course. One-touch trade alerts. You probably have never seen anything like these. And then, of course, automated risk and profit controls among various market conditions. You don't want to end up like this. I thought that was kind of funny. Thought I'd throw it in there. When it comes to investing, I always trust my gut. Well, that's probably not the smartest move, and we're going to show you why. And then also a little bit later, we're going to show you how to jump in. We'll show you basically a trade alert trial here. You can get a demo. We'll send you a trade alert. We'll give you an opportunity to do that here just a little bit later as we jump into the options. We'll get a test of the alerts. And stick around. We'll use our time wisely. I promise we'll move quickly. A lot of material with some solutions, and we'll have something for you at the end with a special offer to see if you want to get involved or not. We can make it even free, everybody's favorite word. So if you like what you see, we're going to show you how to jump on board and take action. So a little bit about us. 3 trading barriers we can all relate to, I'm sure. Algo trading, we'll have a live demo of the automated systems. We call them the trading robots. Then we'll look at the one options market with algos, and then getting started with that special offer, and then the FAQs. A little bit about who we are first. We are AltaVest. We are a brokerage firm since 1997. Of course, we're licensed and experienced with multiple decades behind us. There we are on the trading floor, the S&P 500 options pit with some of our staff that traded options for us. But of course, the trading floor is a lot different now. It really doesn't even exist. And that's because of algo trading, which is really a large part of what we're talking about today. So you may have seen us in the past on other presentations, some of the other vendors and so forth that we've worked with. You might see us on MarketWatch every now and then and other websites. Here's a comment from AltaVest here just a couple weeks ago on the gold market. So we do have a nice footprint on the internet. Of course, we're regulated by the NFA and the CFTC, and we're located in California. So those are the regulators in our industry. And we've traded millions and millions of contracts over the years. So I think that's actually a picture I took on the trading floor near the close. I thought that was a nice photo there to throw in there, even though it was a little bit grainy, I guess, and out of focus. But anyway, okay, so don't try to figure everything out by yourself. That's the whole idea. We've done a lot of the work for you and a lot of experience, and we're going to convey that to you. Years of and decades really of development from industry veterans is what we're going to show you. And just briefly, who am I? I am Eric Gebhard. I've been doing this about 30 years. I have my BS in Business Administration from the University of Southern California, co-founder of AltoVest. Perhaps you've seen some of my other presentations over the years, perhaps not. That's okay. Either way, we're going to jump in, get you started here, and show you these demos in just a brief moment. And I got started way back, it seems like not that long ago, but it actually almost 30 years now, or 30 years ago. There's my textbook there on investments, and we were studying futures and forward markets and options, and those are my notes in the book. This is what was happening in the world at the time. Crude oil prices had doubled in value on the invasion of Kuwait, and gold prices had jumped. So that was the backdrop, and that's what piqued my interest in the markets, and that's where I have been since. I began in the securities industry and mutual funds and so forth, and then I became, I guess you could say, that little voice whispered in my ear about commodities and futures, and that's where I've been since. So with that said, and the introduction is out of the way, what are those 3 barriers to success? And let me know if you can relate to these. You can feel free to chime in and ask questions or chat. Everyone is a genius in a bull market. I think that's a fair assessment from Mark Cuban. So I had to put this in there. I sort of got a chuckle out of this image. So sometimes that's how we feel if the market goes straight up and all you have done is just basically bought anything. But of course, day trading is not that easy. And here's another example of what we need to avoid. Here's a guy here who says, I don't know what the heck I'm doing, but I'm making money. The investors are exuberant. This guy says he's been trading stocks for 3 days, and just like that, he made $300. In the next few weeks, he had 500,000 followers on TikTok. So I don't know, maybe that's the blind leading the blind. I think that's a good way to put it. But how about this? A less than 1% success rate. So what are we talking about? Here's a study in the Journal of Financial Markets analyzing day traders. It says here less than 1% of the day trader population is able to predictably and reliably earn positive abnormal returns net of fees. That's from a few years ago, but I bet that number isn't a whole lot different. Okay, so here's another comment here. It says basically, why do people make terrible day traders? That's an interesting book, Winning the Loser's Game. And here's part of the reason, trading precision. Let's think about this. If you're going to be trading assets, you need to be 100% perfect with picking the correct asset, direction, apply the strategy. You have to get in at the right time and price and then get out at the right time and price. But look at this here. Mark Skousen is one of the best economists around. He says, well, let's take a look at what he says here. He did some studies about trading using random dart throwing and monkeys and so forth. Turns out the monkeys outperformed the index by 1.7% per year. So interesting. So here, folks, there is your best trader. I like that guy there. All right, so also random darts beating hedge fund stars. Again, that's just from a couple years ago. And I think we can all relate to the idea that, you know, sometimes even the pundits and the best in the business and the investment community don't get it right. And part of the reason, well, there's a lot of reasons for that, but one reason we don't get it right is emotions. Remember, it can be expensive trying to convince the markets that you are correct. That's from Ed Sequoia, System Trading Pioneer from Market Wizards, great book. I still think the market was wrong. You don't want to end up like this person. That's what we're going to try to help us avoid here. Remember, our emotions become our own worst enemy. Hope, fear, greed, anxiety, frustration, boredom, all those things swirling around in our head as we're trading. And also there's a whole lot of noise. I think this cartoon summarizes it best. And then how many of you can relate to this? Maybe if anyone can comment on where you think you are right now on this curve. You start out optimistic, you get thrilled, you get euphoric, anxiety, a little denial, fear, depression, you wave the white flag, and then you become despondent and a little bit of hope, some relief, and now optimism again. So the cycle of market emotions, I think everyone has been on this curve, on every point along that curve, that's for sure. So we have bad wiring, we have a built-in bias to make poor investment decisions. We chase past performance, we sell the lows and we buy the highs. I think we've all been, are all guilty of doing that at some point, that's for sure. Our brain is killing our returns. 3 common biases when making investment decisions. Our worst financial enemy is ourselves. So really we get in the way of our own success. We have confirmation, anchoring, and recency bias. Won't go into all that, but this was kind of crazy. 2/3 of adults who have been investing for less than 3 years are using social media to make their stock trading decisions. So I don't know, is that what kind of bias would that be? Confirmation, anchoring, recency. I think perhaps all the above, really. But I think in large part you have confirmation and recency there. And I think really what it amounts to is the market and people are always looking for a story. What's the narrative? Sell me a story and then I'll buy it. So that's what's happening of late. So let's look at algos though. They're trading and they're dominating the marketplace, but they of course have no emotion. 80% of the stock market is dominated by algo trading machines causing drops and rallies. I think we probably can all sense when that's happening. Algorithms sped up at the selling last year, leading to the fastest bear market in history. And then Bloomberg notes here, robots are outwitting humans on their investment picks. No surprise there. That's revolutionary trading. It's one way to look at it there. Sometimes we, I don't know, that's kind of a nice little comic here. I think sometimes we're all kind of hunched over at the screen and, it almost looks like we're back reverting to where we started on this evolutionary line here. But here's where you really want to end up in some degree. I think make life a lot easier, and that's what we're going to show you in just a second. Here's what it used to look like on the trading floor. Grainy video I took. Of course, now this is what it looks like. This is your competition here. Full automation, built-in risk controls, no emotion at all. And let's look here at diversifying your stock portfolio with automated futures trading. So we looked at automation and how the machines are taking over, and how could you apply that to what you're doing with maybe a stock portfolio that you have. Last year, you see stock market, of course, dropped rapidly throughout March, and then you see the VIX or the fear index has an inverse correlation, obviously. It spiked to levels it hadn't been to, I think, since 2008, if I can recall. But here's an automated system, fully automated robot trading system, so to speak, and here's how it performed in March. So you can see that regardless if the market, in this case, the stock market is moving up and down, there are automated trading systems that really could care less if they're short or long, or if they're in the market for 5 minutes or 5 hours or 5 days. It makes no difference to the computer. Of course, remember, past performance is no guarantee of future results. So how can we use some of these algo systems in our portfolios? That's what we're going to show you. We have automated systems, user-friendly, advanced, or novice traders. It makes no difference. You can filter for risk and reward parameters or market type or whatever you like. diversify among market sectors, automation with risk and profit controls. You just set the machine to on or off, and that's all you need to do. The markets move up or down, and the machines and algos don't care. You can do day trading or swing trading systems across multiple market sectors. So we're going to jump into this, and we're going to run through this demo quickly and then get into the options where we're going to spend more of our time. So we're going to have a live demo here, sort of this test pilot. I got a kick out of that photo, so thought I'd throw it in there. So here are the new robot friends at AV Systems. We're going to look at some of these automated trading systems. And we're going to jump over to another screen. Give me one moment. Okay, now you are all looking at my screen, and that's the dashboard for AV Systems. That's the name of our algo trading platform. And I'll explain this in just a moment. And we're going to make it real simple. We're going to follow along here. At the top of the screen, you'll see number 1, 2, 3, and 4. That's really what we're going to do. We're going to show you how to explore the systems right here, how to subscribe to a system, how to then activate it, then how you monitor the performance once you've activated it and the system is trading live. Now, of course, this is our demo account I use for these presentations, but really any live account or real account would look the same, pretty much the same. Now, the first thing you do is explore. You can use this field here and type in the market you might be looking at. Maybe there's gold, or maybe there's NASDAQ, and you'll see it pulls up. There's 202 NASDAQ systems, or maybe the Dow, 126, whatever it may be. Crude oil, 146. But here is really the best way to do it, and I'll show you in a second with this filtering tool. But also I want you to see this table here can also be customized and display anything you want. So any of the criteria here are available for display on that table. Perhaps you want to get rid of some of these and add the Sharpe ratio. That's a risk-adjusted return measurement, and maybe you want to look at ones that have actual clients, real money, live data, real money performance, and then that table reflects all those headings and criteria. You can sort in ascending or descending order. So here's your annualized ROI. You'll notice some pretty big numbers here. The best system here is 764%, sort it the other way, and the worst is about 42 to 12%. So those are pretty big swings. Keep in mind, anytime you have these big returns like that, you'll have some larger amounts of risk. So I'm not showing you that, suggesting you're going to receive those types of returns all the time on these systems, but some of them do generate some pretty big numbers over a period of time. That can also work against you. So really, the whole idea is just to show you here on this table that you can customize it to reflect any criteria you want. So we'll go back to the default setting. And now let's look at how to filter. So you'll notice there are 2,100 systems, 2122 to be exact. So each one of these names here is a particular trading system. So how would you know where to begin in terms of choosing a system if you wanted a system to trade for you? You look under this filtering tool, there are quick filters. These are just default out of the box. So here's systems tracked for more than 1 year and they're profitable. So now you're down to 611 that meet that criteria. And then you could add, as another filter, it has clients and required capitals less than $5,000. So now you have 55 systems that meet those two criteria of these filters. You'll see the filter here. So you can modify the filter with this little pencil here, change it to anything you want it, and of course you can delete it or clear them all. And here's one thing I like to do. This is the really most powerful aspect of this platform. It's the advanced filters. So let me show you what I'm talking about. you can filter systems on any of these criteria. And then you'll end up with a pool of systems, maybe just a handful that meet the criteria that are important to you. So you can completely customize the results of your filter and end up with systems that you find most appealing. For example, let's run through an example. Here's suggested capital. Maybe we want to look at systems that have suggested capital of 50,000 or less. So we'll add that as a filter. So now we have 921 systems that meet that criteria. And you'll see this number one filter listed. We can add a number one. This is a good one here. The type of system. So you can do intraday or swing trading. Maybe we'll look at intraday. So that's day trading system only. The algo is going to be out by the close, so there's no weekend risk. So you can add that system criteria, to the filter. So now you have 565 systems that meet these two filter criteria. Let's add another filter. How about it's been live trading, has a live trading track record. I don't know, let's jump to last year, 2020 till now. We'll add that. So now you have 132 systems. So you see we're narrowing down the pool of systems that you might feel are appropriate for you. We'll go ahead with another one. We'll look at the worst drawdown. So what's the maximum drawdown or the worst loss that you would have been sitting on? Let's make that $5,000. Okay, so now you have 62 systems here, available to choose from. You have these 4 filters in place, and maybe add one more. I'll just throw out one more. Well, we looked at ROI, annualized ROI, and what could we come up with there? What if we started with let's throw in 20%. So there you have it. Just like I thought, you end up maybe with a handful of systems that meet your specific criteria. So let's click OK, and you'll see here they are. You have 4 systems that you filtered for and meet your specific criteria. And it's just that simple. It's a very, very powerful tool. So I'm going to go back and clear all those. I'm going to go back to the table and set that to default. And I will also show you this, any one of these systems here. We're going to dig in and show you what they look like. If you save a system with if you click on it, you can turn it into a gold star, sort of as a favorite. The blue means it's active, and I'll show you that in a second. But let's go ahead and look at, here's one called Samurai Copper. Or in fact, let me look at this one here. It's the soybean system. You're thinking, I don't know anything about soybeans. Well, you don't have to. The algorithm does everything. But this is going to look similar for every system in terms of the setup, what they call a tear sheet. So you'll notice soybeans, it's a swing trading system. It costs $90 a month, and that's the license fee that's deducted directly from your account. And all performance, I should point out, is net of all monthly cost and all trading commissions. And you'll see here your equity curve on this particular system. The suggested capital is 20,000, and 20,000, or the suggested capital, is what is used to calculate all performance. Not the required capital, but suggested. So that's how much you need in order to trade and maintain this system in your account. And you'll notice you have all the details for the system. You can look at all the different criteria and parameters. You can see all the definitions just by clicking on that bubble. And you'll notice here, percentage of winning sessions, your best session, your worst session, whatever you need, it's all available here. Percentage of time with an open position, 91% of the time. so on and so forth. And now this table is very important here. Everything with a white background is back-tested data. So it's all back-tested hypothetical data, and it does account for all commissions and slippage. So keep that in mind. All the back-tested data is already incorporating slippage and commissions. Now, when it turns green, that means there's live trading going on. So clients have activated this, and the algo is trading this system for their account with live real money. And if you want to get a detailed look at what's happening, this is how you do it. You just click on the month, and here is April, and you'll see day by day, whenever there was a trade, you'll see the gains or the losses here, and then the accumulated gain or loss, and by the end of the month, you'll have a total. And then, of course, your equity curve here started out and had a little bit of a drawdown here, and then it recovered and ended the month with a nice gain. So that's what it looks like. You can drill down and look at any month and look at March of last year. For example, we talked about the stock market dropping like it did, but here's a system trading soybeans, and it really could care less if the stock market's up or down. It's basically trading short or long in any direction, and by the end of the month here, it had a nice gain as well. So that's what we like about these systems. They have non-correlated returns. And here, if you want to really get granular and jump into the details, you can see the trade log. So nothing is hidden from you. You get to see everything that's transpired, the type of order, the trading volume, flat by the end of the day. The next day it's long, it sells, it gets out, it's flat. Here's the pricing, you name it. It's all available for you to look at. Here's your session log. So if you want to look at it just day by day, you see some days there's no volume in this system. Other days there might be 2 or 1 or 5. End of the day, it might be flat and it might be long, whatever it is. So it's all available. Everything is visible for you on this graph right here. So it's a really handy tool to look at. And let's look at another one here, and we'll kind of move things along. Here's one called Samurai Copper. I love that name, Samurai. This one has suggested capital higher amount, 55,000. But it's also looks like it's generating some bigger numbers. It has more history, but it's been trading live since April of 2019. So you're looking at 2-year live performance track record. You see 2019, just over 30%, 2020 did 45%, and then year to date, we're at about 3.8%. Of course, remember, past performance is no guarantee of future results, but nonetheless, we do like having this visibility, and you will too, for sure. And you'll see here last year, March, look at that nice performance there in March when the stock market was going haywire. But of course, you don't need the stock market or any other market to do one thing or another, because this is just trading copper, and the robot doesn't care what's happening in all these other markets around it. And this one here is a swing trading system. You can see it's $75 a month, and that's what the copper system looks like. And then we'll just look at one other here, and then we'll move along. There's a NASDAQ system that's interesting. So this has suggested capital of 30,000, and it's been trading live here since May of last year. Had a nice year last year, 17%, but look at year to date, 96% so far, having a big year. And you can look at all the details for the trading, just like any of the other systems we looked at. They all work kind of the same with these tabs here. Now here's what you do next. If you would like to trade a system and have it active and live in your account, you can do so with this padlock here, or of course, you'll notice these padlocks are all available on the dashboard too. So if you click on the padlock, this is how you do it. You would buy the license, 1 unit for a month. Every month is when the your account is deducted. You would subscribe to the system. This one's $185 a month. Remember, everything is net of all fees, all the performance. So you'd want to read the disclosure, and then you would accept it. And let's see, once you've licensed it, purchased the license, you would want to activate the system. You can activate immediately or on the next session. And if we try to activate, in fact, I'm not sure if I have enough Monopoly money in the demo account, but it's okay. Let's see what happens. If it doesn't activate, that's fine. Actually, that's a risk control. That's a good point. If you don't have enough money in your account, you're not allowed to just randomly activate a whole bunch of systems. So there's definitely risk controls in place. And there you have it. It's insufficient balance, not enough money. But let's look at what happens if it were live and active. I'll show you where to go. So if we did activate that, here's where you go next, to My Systems. So here are some other systems that have been activated in our demo account here as we do these presentations. And let me point this out. You'll see there's crude oil system here, no position today, but overall it's made $105. E-mini S&P 500, there's 4 systems here. You'll see this one's a big winner so far, 26,000, and the rest are moderate losers so far, but overall, cumulative on those systems, 16,000 positive. You'll see a gold system here that's doing well. You'll see NASDAQ, 2 NASDAQ systems. One's making money, one's losing money. Mini Dow Jones systems, both are losing money at the moment, so negative. Then you have a soybean system. The accumulated gains here, making some money, a little bit of money at the moment. And so this is all data that's all live, and a lot of these systems here you can see are not in a position. 0 position means they're flat as we speak, but this one's currently long a soybean contract. And you'll see here it's sitting on 8.75 cents of gain the last trade, the profit, so far today, and closest order, the last trade. So everything is visible. And now here's what you do if you would want to, on any one of these systems, cancel it and deactivate it. You would just go to Stop Strategy, and you can stop it on the next day for the next market, or just the next entry. If you don't want to take the next entry, then you click deactivate, and it's just that simple. So you can activate something and then just walk away from it and let it run, and it's just that simple. You can see all the fills for the day. This is today's session here, or of course you could go backwards in time. You can see the mini Dow, the soybeans, and this other mini Dow had some trades today. You can see any orders that are currently in place. So these E-mini S&P 500s and the soybean system each have, here's a limit order, here's stop order, and stop order. Tells you the price of the order and the distance from the market. So everything is visible and transparent. Nothing is hidden from you. And that, my friends, is a brief overview of AV systems, algo trading. And then here is a fun page, and we're going to wrap this up and then jump to the options. But here's the top 10 list for today. So these are the best performers for today. And then from yesterday and last month, and then last year, and then of course since 2001. So there you have it, folks. I wanted to run through that example and that demo of AV systems. It's a very, very powerful trading platform. And with that said, I'm going to skip over and we're going to jump over to the options. Okay, so hopefully it doesn't feel like that's a whole lot of information. It's actually quite simple. I know there's a lot of systems there. I think we went through that quickly, but you get the idea. So if you're thinking, I love it, I want to do it, but I've never traded futures, you're not alone. But really the idea is the algos do the trading for you. So you don't need to know about crop reports or market valuations or anything or charts. Everything is done for you by the algos. They trade in metals, energies, stock market indices. currencies, you name it, it's available. Remember, futures have deep liquidity, fully transparent. There's leverage inherent with futures. You can diversify with alternative assets. The systems go both long and short, and of course, they're cost effective. Now, let's jump into the options trading. Look at the one market and solution I think you're going to want to know about: automated options technology. For up, down, and non-directional stock index futures markets, it's a unique approach and strategy. And why do we like a stock index? Well, it's less volatile, of course, and we have a proprietary strategy that really only works with an index, and we can follow one or two markets, not thousands of different stocks. So, here's an example. Here's Tesla. You get these large percentage moves, 100% in a month, down 35%, then all this chop. And of course, with a stock index, you're not going to have those large dramatic moves that you would in a individual issue. And with that said, let's look at insurance companies. It sounds boring, but it's not. We'll make it exciting. You pay them premiums. That's how they make money. They're basically selling time, hoping nothing happens. But they do insure themselves, and they're consistent and they're patient, and they just look at probabilities in the math. That's all they're looking at when they issue a policy to you. Statistics, actuarial tables, expected returns, higher probability outcomes, just like a casino, no different than a insurance company. If you bet on that 38 times, $100, you're going to have a $5.26 average loss per spin over a long enough period of time. So that's the house's edge, and the casino wants you to sit there and play forever because they're going to make money in the long run. Now, it's really the law of large numbers, like flipping a coin. You do it a million times, you'll get 50-50 heads and tails if it's a fair coin. You might do a coin toss 10 times, you might even get 10 heads or 10 tails. So that's what really the law of large numbers is all about, and that's what we're going to try to apply with our options trading. How to be the house when trading options. Look at high probability option strategies. Collecting premiums, you might want to call these base hits. You're looking at a baseball analogy. Use consistency and be patient. Manage your risk. You know that you will have losers. Manage reward, not get greedy, but you need the proper tools to make this happen. Remember, we're looking at base hits, not home runs. Short option strategies can be non-directional, bullish or bearish, looking at these higher probability outcomes with predetermined risk. Let's jump into a credit spread real quickly. And if you know this, it'll go quickly. And if not, we'll make it super simple. These are insured positions, predetermined risk and reward, and they might be non-directional. So here's a graph, and don't worry if you don't understand it, but essentially here's the calls on the top end of the credit spread, and here are some puts on the bottom end of the credit spread. But you're looking at the market, in this case the S&P, to trade in this range. So there's a large margin of error. And to understand that, let's look at the Greeks. We're going to look at two of them. We're not going to get bogged down into the weeds. We don't need to. Delta, it's just the approximate probability of expiring in the money. That's what delta is about when you're looking at options. So if there's a 0.25 delta, there's a 75% chance that that option is going to expire worthless. And of course, delta is always moving with price and time, and it is not the probability of a winning trade. So those are two separate things. And there's also time decay, and that's theta. So when you talk about options, you say the word theta, that references time decay. So it's a negative number equaling 1 day of time decay. So if an option's at 10 points and theta is negative 0.05, so the next day that premium is 9.95, and after that it's 9.90, and so forth. So that's what theta decay is all about, and that's what it looks like on a graph. Here's your timeline. You get closer to expiration here to time 0, and that percent of the premium of that option starts to really, really drop. That's because of theta decay. So here's what selling a call spread might look like. You sell the red line, that 35.30 call, you receive 4.5 points, and then you also buy that 35.50 call and you pay out 2.25. but the net premium is $112.50 in this case, minus your commission. Just that simple. And then selling a put spread, just the opposite. Here are the puts. You sell that red line there for $3. You receive that, 3 points, I should say, in this case. You buy the $29.70 put, you pay a point for that. So the net difference, $100. So that's what selling a put spread is like. That's how much you collect. These are not naked options. Everything is covered. Your maximum risk is capped. No naked cats or mice. And remember, covered options, a big advantage is there are no margin calls. So this is not unlimited risk. You don't want the market to force you out of a position. And that's why we're doing covered spreads. Here's an iron condor. If you know what these are, great. And we're going to show you a variation in just a second. You're selling a put and a call spread. That's all it is. You take the call spread and the put spread and you sell those at the same time, and you end up with the iron condor is the name of that strategy. You look for the market to stay in that range. So here's our proprietary short option strategy. It's called a Dragonfly. Has 6 legs. It's a variation on a condor. And here's what it looks like. And I'll explain it, and then we'll jump into the demo of the Dragonfly. You sell 4 of these calls, buy 3 further out, and then 1 closer to the money. The same structure on the puts. You're selling 4 of these puts, you buy 3 further out of the money, and then 1 closer to the money. And you'll notice that in this case on the call, the 40-10 call that you buy is 50 points closer to the money compared to the 4 that you're selling. And the same with the puts on the bottom side here. The one that you buy is 50 points closer than the 4 that you've sold. So this creates a completely different risk and reward dynamic, and we'll show you how that operates. Remember, you own this one here and this one here, and they're 50 points closer to the money, so they will not lose time as much. The theta decay won't impact them as greatly, and they'll also gain in value more quickly if the market moves in their direction. But how do you know which trades to make? How would you even build that spread that we showed you? What's the pricing? What's the timing? Which strikes? How do you manage it? It's called Theta Trader. These are pre-built option spreads. Our proprietary algo builds what we call theta trades. We have advanced strategy automation, bull, bear, and flat markets, automated risk and profit tracking, something called the risk thermal indicator. This is very important, and I'll focus on that. And it's all color-coded with automation to manage your spread positions. Simple and effective spread selection and management with Theta Trader. So it is time to switch gears here. And we're going to jump into Theta Trader. Okay, we're looking at the dashboard of Theta Trader. And I'll explain this here in just a brief second. It's quite simple, actually. This is your dashboard. You'll see this section here are the Theta trades, and I'll explain that in a moment. These would be your open short positions or sold spreads here. Any long positions that you would have bought would be here. Nothing at the moment, although sometimes there is in the demo account. This is your account info here. This is pulled directly from your AltaVest account information, and then of course current quotes. And the first thing you might notice here on the Theta trades, there are bullish strategies that are pre-populated, bearish and neutral, and it applies to the E-mini S&P 500, NASDAQ 100, and the Russell Mini as well. Okay, and we looked at bullish, bearish, neutral, but in the presentation we just saw a condor and a dragonfly, and that's what we're going to focus on. Here's today's Theta trades, anywhere from 17 to 59 days till expiration, and these are already pre-built for you. The algorithm has selected the strike prices, the expirations, and the pricing for you. You'll notice this is your maximum profit potential at expiration, This is your targeted annualized return at expiration. And of course, it's not realistic to expect these types of annualized returns. This number here is only to compare one trade to another. So you have some sort of context and perspective. And with that said, let's drill down. And the first thing I like to do is look at a graph. This gives some context here. You'll see this graph here of this condor showing the calls, the call spread above and the put spread below the market. That's what it looks like, kind of the helicopter view. Now here are the details on this particular spread. Here's the market, the days till expiration, expiration date, settlement value, the net premium, your put call risk, commission, available capital in the account, cash required. And let me drill down, and this is important here. Cash required is $908.50 to place the trade. Your maximum profit potential, in this case, $91.50. Now, why would you be allocating $900 to make $90? Well, remember, we're looking at higher probability outcomes, and we're looking at deltas, and let's look at what the deltas are. The put that we're selling has a delta of 9.78%. That means there's over a 90% probability it will expire out of the money. And the call, the delta is 6.88. So now that's a 93% probability that this option is going to expire out of the money. So that's the type of higher probability outcome that we're looking for. Here's your targeted return on cash, just over 10%. Targeted annualized return here. It's a condor that we're selling, so it pre-populates to a sell by default. You can change the quantity, and you notice the numbers, of course, change along with it in terms of your cash requirement. We'll jump in and do an unusual number, 6 of them. We'll leave the value at 2.25 and we'll place that order. And there it is. It just shows up as you're filled here in the demo account, and it's just that simple to place an order. It's all pre-built and pre-done for you. Now let me show you the Dragonfly. And the best way to do that would be there's a trade simulator. Let me show you first of all the Dragonfly. Here are the Dragonflies for today. Here we'll do the July into month. This is what that Dragonfly looks like. In this case, you notice the call that you're buying and the put that you're buying are both 50 points closer to the money, and that sometimes changes depending on the market environment, but that's the wizard behind the screen, I guess you could say, the algo making that decision. And you'll notice you have the same high probability here of these options expiring out of the money with those deltas at those numbers. And we'll run through, we'll do 3 of these. You see the cash required, 14,000. And if you notice, the targeted return on cash is a little bit lower compared to the condor. And that's simply because, remember, you are buying this call and this put, and that cost money. It's like buying for additional, paying for additional insurance. It changes the dynamics of the trade, and I'll show you that in a second. So we're going to sell 3 of these at that value there. It's already pre-formatted for us, and there you have it. Now let me show you the simulator. To get to the simulator, you'd go right under trading, and to save time, I've loaded a few trades. And let me show you how this works. We can go backwards in time, and we're going to look at a condor that was placed on March 4 of this year. And we'll run through here, and you'll see as each day goes by, the RTI is green. That means good, do nothing. Now it's turning yellow, slightly elevated risk, and that makes sense because the market just keeps moving higher and higher, getting a little bit close to the upper boundary of that short call on the condor. Now it turns orange, which is higher risk. Then it turns green again, so do nothing. It goes to yellow to orange, back to green. So this one is really taking its sweet time. It finally turns red, and that means too much risk. Take a loss on the trade and get out. Now you can automate this, and I'll show you how. You don't have to monitor it. DataTrader will automatically monitor the position for you and close out that position when the risk is too great according to the algorithm. So that is an iron condor. Remember here this date, March 4th of this year. Now, if we placed on March 4 a dragonfly instead of a condor, what would have happened? Let's take a look. Look at this. It turns blue. That means take profit. You actually get a profit-taking signal on this dragonfly, and you can close that position out as opposed to the condor here, which really ended up taking a loss. So the dragonfly, like I mentioned, has a completely different risk-reward characteristic. Then you have two more opportunities here to take profits, and after it turns blue as well. So your premium captured here, percent of your premium collected at settlement, in this case 76%, 71%, and the algorithm says this one's 74. That's enough money to take off the table and go to the next trade. Any questions on this? Let me know. I can sometimes get to them during the presentation of the demo here. Otherwise, we'll just wait till we're done with the demo. And here, let's look at another trade. November 2. Here's a condor. Oh, sorry, folks, you can't see the screen. And look at this. It turns red. You take a loss on December 2, about a month later. And remember the date on this one here. That was November 2 of this last year. So November 2 of last year, what about a dragonfly? Turning yellow, turning orange. You know, risk is elevated. It's getting closer. But remember, you also own this particular call. And then it turns red. So just want to point out that really on the same day, the dragonfly triggered a loss, just as the condor. So I'm pointing this out because there's always risk of loss, and a dragonfly is not impervious to losses. But let me point out one thing here. The loss on this dragonfly was 275% of the premium captured. Now let's compare that to the dragonfly. And in this case, it's just about the same. Okay, so the dragonfly really made no difference in this case. And let's run through another sample here. May 1st, here's a condor. In fact, let me just do this. I'll just go right to the end. This condor here turned profitable on June 24, which is all good and well. And how about the dragonfly? Look at this. The dragonfly turned profitable on May 28. So three and a half weeks earlier, you were able to pull the trade off, take profits on the dragonfly compared to the condor. You had to stay in that trade until there was 7 days remaining till expiration before the condor matured enough to take profits. And this one here, you were able to get out with 34 days till expiration. And we'll look at another condor here on November 20. Or maybe we'll save some time, go to the end. And look at this one. This one had a loss here on January 16. Condor had a loss. But look here on January 3, starting on the 3rd, you had these days here and opportunities to take profits on the dragonfly. So once again, and also notice here the premium captured at settlement over 100%. So in the case of the dragonfly, you're actually getting paid to close out that trade. So very, very unique risk reward dynamic. That dragonfly has a completely different character compared to the condor. And with that said, let me show you how we can automate this. You would go to your settings under the account and you automate the risk manager and the profit directive. So once you check these boxes and then save the settings, when the RTI turns blue or red, your positions will be automatically closed out. So theta traders scanning it and monitoring that for you. You never have to worry about screen watching and babysitting those trades. There's also a large help file here if you want further details on the color coding on the RTI, more definitions on the spreads, all available in the help file. There's also tutorials. These are all videos, video tutorials here. And we also offer daily research. It's our daily newsletter called TradeScope. We do a little analysis on the indexes and then a market outlook as well. And we also do this. This is very helpful. People really like watching this as well each day because it gives a review of what happened just on one page, what happened in Asia and Europe and the US, what to look for moving ahead, some technical resistance zones, and then also you'll see any trades that were filled July into month Dragonflies in this case, yesterday. And here I want to point out that we can go back to the dashboard and you can see, of course, all your open short positions right here, or you can go to the positions page and look at them all on one page with more detail. So you can see at a glance what the RTI color is. And if you want to look at any of the trades in more detail, you just click on any one of them. So here's a 6-lot iron condor, the one we just placed actually. And it's not the right one to choose because there's no history on it. Didn't mean to do that. Yeah, so here you can see here's a trade we placed May 20th, and not a whole lot happening. Market just kind of barely moving along, and the trade is maturing nicely. And that's how you would look at your open positions at a glance on one page. Now here are the closed positions. And then after we're done with this, I'm going to show you the best feature of all. So make sure you see the best feature of all regarding Theta Trader. But here would be your closed positions. You can sort by date or market or just look at them all. So a total of 20 on the page gives you your total P&L, your short positions, your long positions, and you'll see all of the history here of your positions. And if you wanted to look at any one of them, here's 3 dragonflies, for example. And here's the history on these 3 dragonflies placed on March 10 of this year, and then closed out on March 30th for a nice gain. And that's how you would look at your closed positions. So there you have it, folks. We could go, I want to point out one other thing real quick before I shift the screen. Remember, we're looking at the neutral or non-directional condor and dragonflies on the E-mini S&P 500. There's also the NASDAQ 100, the Russell 2000. But of course, there are bullish strategies and bearish strategies as well. We just don't want to spend all of our time jumping into that. But let me show you the best feature of all. Hopefully you don't feel like that's too much to take in at once. Okay, let's see if we can make this easier. Trade alerts. These are really no joke. These are 1-minute trade alerts, one touch responsive. You simply touch accept or reject on your device, and that's all you have to do. These are live and they're integrated with your account. So once you touch accept, the order is placed. And here is a brief little video. You can take a look here. I'll play that. Let you watch it, and we'll be quiet for a second. Let me run through that one more time. Let me point out, you'll receive a link. It'll take you directly to the alert page. It'll have an image there, of course, of the alert. And you'll notice here the quantity is already pre-selected for you. It gives you an idea, tells you what the cash required is, the premium that you're collecting, days till expiration, your targeted annualized return. So everything is pre-sized and pre-formatted essentially for your account. That's it. So what you can do here is you can enter your 10-digit US cell phone number in the questions window, along with the name of your wireless carrier, and then we'll send you a test trade alert here. So if you'd like to do that, I'll pause. So it should look something like that on your screen, where you ask a question and then enter the question and press send. And I will just wait a brief moment while everyone does that. Anyone who wants to get an idea what these trade alerts would look like on their device. Yep, very good. No, thanks. Absolutely. People are saying thank you, thank you, thank you. Yes, absolutely. Thanks for entering. Thanks for the opportunity. Yep, absolutely. Okay, so with that said, let me go ahead and move on. We're going to move on to the offer. Here's what you look for. Here's the membership offer. It's called our VIP membership. And you first, remember AV systems, we looked at the algo trading systems, automated futures trading solution, lots of development, professional developers and programmers, over 2,000 systems right now on that platform. You saw how to filter for them. Multiple market sectors. There's really that simple. You flip the switch on and activate it and walk away. Everything's transparent. You remain in full control as to when you want to deactivate. You saw how we did that. So all the risk and profit controls are automated with each algo. Intraday swing trading systems, live performance track records. We've spent a fortune on technology over the years, developing systems and you name it, futures and FX and options. It's definitely costly and time consuming. To do one programmer for one algo for one market, we've calculated just one system, just over $10,000 for that type of professional development. But of course, you have over 2,000 systems and AV systems. Also, you get our A-list, we call it. Those are the top picks. You want to know if your systems are on our A-list research list. That value there, almost $3,000, $2,952 for our research. So remember, with the VIP membership, you have AV systems and the A-list research, a value of over $13,000. And then, of course, Theta Trader. We just saw Theta Trader, the algo-driven options solution. I think it's a one-of-a-kind approach. With Theta Trader software, that proprietary algo will build out those option spreads, simple trade selection and trade tracking. And then we have the RTI, which is the color-coded management tool that automatically manages those trades for you. You can put that trading on autopilot. Remember, we talked about emotions. We want to remove emotion from the equation as much as we can. You have the trade simulator for backtesting. Of course, with those charts, we saw how much fun those were to use those backtesting and those charts in the backtesting. So Theta Trader offers Theta Trades, the RTI for automation, and the trade simulator, a yearly value of over $3,500. And then you just saw the trade alerts, that one-touch trading. You simply accept or reject, and that's it. And remember, each trade is tailored and sized for your account and integrated with your account. Touch accept and place that order. Then the RTI will manage the trades for you. Trade alert services cost a fortune, but remember, This is all included with Theta Trader. That value is over $4,400 just for the trade alerts. So Theta Trader offers the software for Theta trades and the trade alerts, over $8,000 value. So just to summarize your VIP membership, you have AV System software, Theta Trader software, and the trade alerts, over $21,000 value. And then here's the best part of all, ladies and gentlemen. You have a VIP membership with a private coach. You have one-on-one training. You have a Series 3 licensed and experienced broker to work alongside you with screen sharing sessions. So you can look at system selection and basically advanced option strategies and Theta Trader, whatever it is you have in mind, we can set up those screen sharing sessions for you. So you have a co-pilot, you can develop a relationship with that person and discuss your trading in your account. That is really invaluable, at least $7,500 value. And the way I come up with that is people are charging $25,000 for trading education. And what we're saying is we provide you what you need to work with us and use Theta Trader and AV systems with someone who's licensed and has decades of experience. So remember, you have AV systems, Theta Trader, and the alerts and the trading coach, $29,000 value. And I'll run through this here. I know we're taking some time, but I do want to get to the end and make sure all the questions are answered in the FAQs. But remember here, we talked about our research, valued almost $3,000. We have our online videos. Of course, that's included for the tutorials. So over $32,000 value. We think it can be that one thing that really works for you, helps you save time, allows you to cancel subscriptions, can save you some money, lower your stress level. We think it would be worth it, that VIP membership. So others are definitely paying tens of thousands of dollars for systems, whether it's options or futures or whatever it is. And I know I've been one of them. So we understand how it works. But remember, with the VIP offer, you have systems and Theta Trader together, along with those trade alerts. You get everything and a coach, only $1,997. And that's what we charge in the past with live events. But we do offer a large discount for live webinars. So 60% off, one-time payment, $797, and that's a lifetime membership, one-time payment, not yearly, not quarterly, one time. And there is the link, cf.altavest.com/VIP. So let me go ahead and chat, run that in there, cf. Okay, I've just submitted that in the chat field, so you can all see that. Now there's a 30-day guarantee, so really you have no excuse. If you sign up in 30 days, change your mind, that membership fee will refund that to you. Just ask us. And here's a couple FAQs. How about lowering your tax rate by over 10% with futures and options? Absolutely. These are tax efficient instruments. They're 1256 contracts is what the IRS classifies them as. So how does it work? Here's an example. If you're trading stocks, you do 20% return on 100 grand, you'll have a 12.6% rate of return. If you're trading futures, you would have a 14.64% rate of return, a tax savings of over $2,000, simply because you're in a tax efficient market space. There's also no more itemizing. And then IRA accounts, people ask all the time. Yes, absolutely. Self-directed IRAs, we can do that. Ask us about the details. There are some financial and experience requirements. And now here's the biggest mini market. It's liquid, it's efficient, it's cost effective. It's the E-mini S&P 500 or the ES. And it's 2.5 times larger than all the ETFs around the world. So that's really an amazing fact there. And compared to the SPY, it's almost 10 times greater. So the E-mini ES is really the market you want to trade. Definite advantages in the ES: volume, liquidity, access, almost 2.2 million average daily volume in March. Don't have the latest figures yet. Superior execution, savings of $4 to $15 per contract because there's so much liquidity. You have tight bid offer spreads. You have densely packed strikes and 100 annual expirations. So you have granularity and coverage. What that means is you have strike prices available. Our algorithm can now find the strike prices it needs to build those trades. So you can keep your trades laddered among various expirations and strike prices. And remember too, the advantage is you track just one or two markets, not thousands, efficient margin compared to stocks, and there's a clear cost structure. It's not opaque like all of the payment for order flow nonsense. Remember, these are not securities options. Everything trades at the CME group on their Globex electronic exchange. So all orders are traded through Globex. They don't get rerouted somewhere else. So every order is treated equally. None of that, no nonsense with payment for order flow. Payment for order flow and the fleecing of the retail investor. I'm going to beat up on Robinhood just for a second, if you don't mind. It's not commission free, folks. Robinhood customer orders are executed at prices inferior to other brokers, costing customers $34 million. SEC fines them $65 million for misleading customers. It says here, you're trying to save a penny, but you end up losing a nickel. If you're not paying for something, you are going to pay for it in a way you can't see it. I think that's a fair assessment. Payment for order flow is disguised commissions. If you want the broker to work for you, pay a commission, and nothing of value is truly ever free. And really the point is, folks, everyone trades stocks, but it's not free. So let's be honest, and free commissions are not free. So here is the question. What are commission rates for a theta trader? Our rates are competitive at 5.25 round turn all in. Now remember, if you go somewhere else, and I copied this from a big box brokerage, it says 2.25. But remember, that's per side, and then they have fees like clearing and exchange fees on top of that. It ends up being higher than what we charge. So our rates are competitive. Yes, others are less. You can find less, but we're in a totally different business model. We have real people helping you. And with that said, what is our performance with Theta Trader? Well, it's a trading technology, it's software, and it's for self-directed traders. So everyone that uses it does something different with it and uses it differently. Therefore, their results are different. But once again, keep in mind, all performance is net of trading cost. Everything in Theta Trader and AV systems is calculated net of all trading costs. What size account for a VIP membership? Well, if you're going to trade multiple option spreads and several systems, we probably suggest somewhere around 50 to 100,000. And if you have 100,000 or more, we'll gladly rebate your membership fee. And we spoke about the IRA accounts. Remember, you can do that. There's also the typical individual, joint, corporate, LLC, and trust accounts. And just to summarize why we like alternatives, they may improve diversification and lower portfolio risk. So remember, you might want to think about getting diversified in your traditional assets. You have the Fed policy kind of creating what some look at as a bubble. The Fed says, well, we don't really see any inflation. On the other hand, the market's telling us something different. Here's the CRB index, commodity prices, just roaring higher. University of Michigan one-year inflation expectations are just lurching ahead. You have these consumer prices exploding at their highest pace since 1981. That was the figure just a couple of for May. U.S. producer prices surging most on record. So here's the value of the dollar. Purchasing power is diminishing, and the Fed is seemingly not interested in talking about it. They say it's transitory. Here's the Buffett indicator. Essentially, what's the valuation of the stock market? So you can see us here. We're, I think, at, I guess back here you could have said, oh, gee, it's going to hit an all-time high. It's going to get higher. And it can't go any higher. It can't go any. Well, it keeps getting higher. So the valuations are further and further out of line. So I don't know. Is it delusional? Is it wishful thinking? Is it FOMO? I don't know. But nonetheless, the markets, are certainly not going to move up at all-time highs, every other week for the rest of our lifetime. It's just not going to happen. So we like alternatives, having a correlation, an allocation to alternatives such as we talked about. These are not going to move necessarily in step with what traditional asset classes are doing. So we like portfolio 3, having a piece of that pie there in alternatives. So with that VIP membership, to summarize here and wrap it up, you get AV systems and Theta Trader with your trade alerts and your personal coaching. So we'd love to have you join us, be part of our winning team if you're serious about long-term success. You don't want to just trust your gut like this fly here landing on the Venus flytrap. We think we've got the best approach to some alternatives using automation, can help you trade in any direction. And there we have it, folks. We're going to leave it on that slide. There's the link to get your membership. And I see some people asking questions. Yep, we talked about that as well with the IRAs. Absolutely, we can do that. You just simply need to let us know. Give us a ring. You see our phone number there, what your situation is. And yes, you have an account with us. So AltaVest is the brokerage firm. You would open an account just like you would with any other brokerage firm. We have an online account application. So what would happen is you sign up here at this link to become a member. Once we have your membership, we'll get you the link to start your paperwork, and then you can begin the onboarding process. Okay, let's see that. All right, ladies and gentlemen, thank you for joining me, and thanks for being here. If you have any other further questions, now's the time to ask before we wrap it up. I don't see anything else coming up. So with that said, there also will be a replay sent out, and we'll get that out as soon as we can. But in the meantime, have a great day, and we'll let you get going. Thanks for joining us. I hope to have you on board soon. All right, bye-bye.